Okay, so welcome once again. This is Samuel Ibanda. I'm here for financial accounting, paper 1. Today is a bit a special class. I think I have new members that have just joined in, and basically the new members wanted to test how some of our classes run. I know some have been part of these classes before, but like I think I put a post somewhere and said that this class should be an open class, so being able to get some new people that are joining in. So you'll forgive me if you've never studied financial accounting and this is your first time. Basically, these classes that I'm running on Sundays are classes for people that preparing for exams in October. Okay, so you'll get our discussion to be a little more advanced if you're just beginning on your journey. We'll have special classes for those people that are preparing for December. Okay, so if you're basically preparing for December exams or you're preparing for something else, then you may need to join in the other class as well. But even if you're planning for, let's say, December, and let's say you've been part of financial accounting before our classes, or not even our classes, but maybe you could have some financial accounting background from the degree level, then this class will be useful. Okay, this class will be basically useful. So as you can see from my screen here, today we want to interest ourselves onto preparing manufacturing accounts. Okay, now just to give you a small picture of what our last class looked like. So in the last class, we basically looked at accounting for non-for-profit making organizations, and maybe just also to give you an insight. Of course, once we are studying financial accounting, we do study, of course, the principles, but then we also get down to understanding how to prepare financial accounts for every kind of, let's say, every kind of nature of business. Okay, and that is why we will study how partnerships prepare their financial accounts. We also study how NGOs or non-for-profit prepare their accounts, and then we also now study how manufacturing companies also prepare their accounts. Okay, so we've been on this journey, and I think we started with the standard companies that basically either are doing sales. Okay, the normal retailing companies. We already started with that aspect. We're able to prepare financial statements for several companies. So last class we looked at accounting for non-for-profit, and I believe that the people who are part of the class were able to get a lot of value from that. Now, just also to highlight it clearly to you, is that we usually have, of course, also a revision class. We have a revision class that runs every Tuesday, and that revision class also runs from 7 to, of course, to 9. Now, that revision class is basically intended for students who are preparing for the October exam. You could either be part of this program. Actually, whoever is part of this normal classes also have access to the other revision class. I did that as just a giveaway for them to be able to also advance, and also it also helps us to be able to catch up on some of the things, because here we may try out 1 or 2 numbers, but when you get to the revision class, you're able to get an insight, especially around an examination question, and you're able to get more ideas as well. Okay, so for matters of this class, we basically get down to a topic and break it down from 0 to the point where you need to best understand it. Okay, now of course learning never stops, and I want to tell you that the reason why you're part of this class is not only for the exam, and I continue to emphasize that this is knowledge that you're going to need along with your practice as an accountant, as a consultant, as an auditor, across. I'll tell you that some of these things I really studied them several years ago. Okay, but right now I'm teaching them, right now I'm practicing them, and so on. Even when you go for the interviews, if you're going for the interviews and maybe you're going to, let's say, manufacturing company, they'll bring you some, they'll be able to ask you some of these things that we are going to study today. So I want you to have that open mind to learning and utilizing any learning opportunity, okay? Now, to benefit more from this class, I usually encourage my students to get a notebook, okay? Either, it could be a small notebook, or it could be that book that you call your exercise book. So that everything that we're able to capture from here, everything that I'm able to note on, some of the things may not be found in the notes, okay? So as you observe, you don't just get your phone or your laptop and just look on from the start to the end of the class without writing anything. You know, there is power in writing. Every time you write something down, there is a lot of, it helps, your brain is able to pick some of these things much easier than just listening through, okay? So I encourage you that if you're part of this class, please have a book that you've dedicated for this class, okay? To those that just joined in for today, I know I said that we have, I'm giving you 2 free classes, okay? Now, if you're joining in and this is your first time, I can give you access to the last class, the one of accounting for non-for-profit as well, if you're interested. But after the 2 classes, then I expect you to be able to join in for the paid program as well, to be able to walk along this journey, okay? So not waste a lot of our time, I would love to move to our today's topic. Now, these notes are available, especially to our paid students, okay? So you must have gotten these notes and you must have them if you've been part of the previous classes, okay? Because I share this in the WhatsApp group. So for you to be part of the other WhatsApp group and you're just joining in for the first time, you need to subscribe, okay? So basically today, I felt we should look at preparing manufacturing accounts. And why I say manufacturing accounts is that this topic is very critical in a way that companies that manufacture goods, okay, are not like companies that purchase and sell, okay? By purchasing and sell, I'm relating to companies, for example, companies that are in the retail business that go buy commodities or import commodities and sell them to another person or customer. Now, when it comes to manufacturing companies, these buy raw materials and transform these raw materials into finished goods, which finished goods they're able to sell, okay? So when you're drawing up your, I think we have the generic format of drawing up our P&L, where we say we do sales, less cost of sales, and under cost of sales, we have opening stock, add purchases, and maybe less closing stock. Now, where there is add purchases, when it comes to a manufacturing company, because we don't have purchases, okay, the purchases we make are basically raw materials, basically. But in this case, we're producing our own goods. So ideally, the purchases are replaced by the cost of goods fully manufactured, okay? As we are going to see how that format may look like. So the manufacturing accounts are basically here to give you a broader understanding of how do we determine the cost of goods. Like once we've manufactured goods, how do we determine the value of those goods before we transfer them to, let's say, to our P&L, okay? To be able to determine either we've made a profit or loss, okay? So that is the kind of thing. So, and of course, manufacturing companies are really everywhere, okay? So as an accountant, you need to know, to understand these concepts and need to understand how does production feed into the P&L to be able to determine, let's say, the profit, okay? So pretty much important. So that is what, so you basically, under here, we will define the costs that form the manufacturing cost statement, okay? And then we shall also be able to prepare financial statements for companies of manufacturing concerns. So let's proceed. Okay, so basically, when it comes to us drawing up a manufacturing account statement, okay? Now, when it comes to drawing up a manufacturing account statement, there are key things that we need to look at. Basically, here, we are trying to look at if we are preparing accounts for a company that is of manufacturing concern. what is the composition. Basically, when somebody says manufacturing account statement, we are trying to basically look at what is composed within the cost, okay, of production. I repeat, when somebody says a manufacturing account or manufacturing statement, we are basically trying to compile all the costs that we incur in production of a given good. I'll give you an example. If you're into production of, let's say, a bottle like water, okay, maybe you're Renzoli Bottling Company, you're the accountant right there. The question is, how much do we incur in producing that bottle of water, okay? And that would mean that you're going to look at things like the raw material. Maybe the raw material, you could be looking at water itself, but you could also look at the bottle itself. You could be looking at other things like, let's say, the bottle top and so on. Also, that branding that is outside, okay, to label it as Renzoli Bottling Water. Now, that is like the raw material component of it. But we also have the labor, okay? And now when we are speaking about manufacturing account statement here, we are the first costs to consider are the direct costs, okay? Direct costs, and by direct cost, I mean the costs that we can attribute directly to the product, okay? And like I've told you, for example, water that is on a bottled water is a direct material because it's directly attributable to the product. The same thing would come if it is, let's say, the bottle itself. That bottle itself is directly attributable to the product, okay? So it's a direct material. So within there, we are looking at the direct materials. Now, not only looking at, let's say, the direct materials, but we also have what we call the direct labor, okay? We have what we call the direct labor. And by direct labor here, we are trying to look at the labor that is directly involved in the production of that specific good, okay? So for example, if it's, for example, our water that we are speaking about here, we are speaking about that labor that is involved in production of that kind of water, okay? We're not speaking about the askari, okay? The askari who is at the gate. We're not speaking about the CEO who is doing overall administration of the whole company. Here we're speaking about the guys that are in the production system, okay? The guys that are in the factory directly producing this kind of water, okay? So we're not, that's why we are calling it direct labor, labor that is directly involved in the production of this commodity, okay? So it's very important for us to have a good understanding of each of these concepts, okay? Very important. So for the materials, we are looking at the direct materials that are involved. We're not looking at other materials that are coming through, maybe fuel to deliver these goods to, let's say, to the market and so on. We are basically trying to look at, in production of these goods, what are the direct materials, okay? What are the direct materials? So this can be, and when we are looking at manufacturing, of course, in the same way, we also have what we may also regard as direct expenses. We have what we may regard as direct expenses. Now, in the same way, in the production of goods, other than materials, okay, other than the direct materials, other than the direct labor, we can have other direct expenses that are involved when you're producing this commodity. Now, I would want just to distinguish the two things for your better understanding. Some of you might have done this maybe within cost and management accounting, or done it in the management decision and control paper, if you've done it already. But what happens with, if differentiating between a direct and indirect cost. Now, a direct cost is a cost that you can see that when I get a bottle of water, I can know that there's a cost of the bottle, there is a cost of this water. I talked of there is a cost of let's say the branding and so on. So that is a direct cost. But now when I speak of things like electricity, I'm like, electricity. Because if, for example, Renzoli Bottling Company is actually incurring electricity, maybe to the tune of, let's say, maybe 2 million shillings, maybe per week, yours should to be asked a question. If I'm now costing the value of my bottle that I've produced after consuming this 2 million electricity, can I directly say that maybe a single bottle has maybe taken over, let's say maybe 50,000, or okay, maybe 50 shillings of the value of electricity that I've paid. Okay. Now electricity becomes sort of an overhead, like it's a factory overhead that is not directly attributable. It's not like the material of the water itself. Okay. So it's very important for you to understand, to distinguish. One of the other things that you could think about when it comes to indirect costs could be rent for the factory. Okay. In case you're renting the factory space, that alone in itself, you cannot attribute it directly to the bottle. Okay. It's a general cost that is basically covered up by the rest of what? By the rest of the production. Okay. So it's pretty important. So when we are looking at the manufacturing account statement, ours is to understand what are our direct materials, what is our direct labor, what is our direct expenses. Okay. So once we do basically have that critical understanding, then we know that we can be able to allocate the different costs. Okay. So after you've looked at the direct costs, like we've looked at them, and I believe you've understood them, we now move to our indirect costs. Now, these are costs that are usually incurred in the production process, but they are basically, you could call them general costs. Okay. They are general costs. You cannot easily attribute them to the product, but they are actually incurred in the production of a given product. Okay. They are directly attributable. Okay. They are general costs that are consumed by all products. Maybe that is just to say, okay, just for your understanding. Okay. So they cannot be traced to a single product. And this could be, for example, they have told us like it could be indirect labor costs. Now, you see in a factory, you have what we call, you have the guys that are in production, okay? Then you have maybe their direct supervisors, okay? Now, you can have a general manager of the factory, okay? Now, a general manager's salary is not directly attributable to a single product, let's say a bottle of water, okay? But then you have to pay the general manager to be able to successfully run the factory, okay? So the cost of the general manager, we classify that as a factory overhead, okay? Like I also gave you an example of rent. Rent in itself would also be part of those indirect costs, okay? The rent of the warehouse. So it's important for you to basically understand and be able to distinguish. We shall see how when we proceed exactly what I'm talking about, okay? Now, after we've understood the respective costs, both direct and indirect, one of the other things that I also want us to understand before we can get into to even look at the format is what we call the stock in trade of a manufacturing firm. Now, apart from, okay, when it comes to the retailing companies, maybe those that buy and sell, for example, either you import and sell or you buy locally and then sell, you don't enter into production. We basically have a single inventory, which is the finished good, okay? Because for you don't produce, only what you have is the finished good. Now, when it comes to manufacturing organizations, we have three categories of inventory, okay? We have three categories of inventory, and you could really note this down if you have a notebook with you. So we have the raw materials, okay? We have the raw materials. Now, the raw materials, of course, like any company, every company that is in manufacturing has raw materials, depending on the good that you're producing. If you're producing bottled water, your raw material, we've already talked about this, could be water. If you're a person who is dealing, for example, in cakes and bakery business, your raw materials could be, let's say maybe wheat flour, could be yeast, could be brew band, and so on, okay? And then we have what we call the work in progress, okay? Now, finished goods don't just move from point one to, raw materials don't move from point one to finished goods immediately, okay? Along the way, because of your processes, you have, you might have something called the work in progress, okay? Now, the reason why work in progress is very important is because at the end of the financial period, okay, when you end your financial period, you can actually have some goods that remain in work in progress. They are not yet finished goods, but then they are not still raw materials. So that's why we are classifying those to be work in progress, okay? We are classifying them to be work in progress. So those are also part of your inventory. And then we have finally the finished goods. So at the end of the financial year, when we are closing up our books, we have to classify and find out how much is in raw materials, okay? Either opening and closing stock of raw materials. We also have to determine how much is in work in progress. Like how much did we start with in the financial that was in work in progress, and how much are we ending with in work in progress, okay? So it really helps you to be able to relate the two things. And of course, the other is the finished goods. Like I've indicated, you can have at the end of the financial period, you can have your openings. You can have the opening stock that you started with at the start of the financial period, but then you can also have the closing stock which you are with at the end of the financial period. Okay, so it's important for you to understand. So that is a composition of the manufacturing cost statement or manufacturing account. So we shall just look at how it will look like. Okay. So for example, now this is in terms of how do we compute, okay? Now, when it comes to the cost of raw materials, okay, which is your direct material component of your manufacturing account statement, how do we calculate the direct material cost, okay? How do we calculate the direct material cost? Now, do you remember how to calculate the cost of goods sold in the normal P&L, okay? For example, for a retailing company, a normal P&L, when we are calculating cost of goods sold, we usually do opening stock, we add the purchases, and then we less closing stock, okay? Opening stock, add the purchases, and less closing stock. Of course, we also have adjustments that we can make to the purchases line, but basically, that is how the simple way you compute your cost of goods sold. Now, even when we are computing our cost of raw materials, okay, our cost of raw materials consumed, and that's basically here we're trying. Remember, we are drawing up this manufacturing statement or manufacturing account to determine the cost of the goods. Basically, we are trying to determine in overall how much have we incurred in producing, let's say maybe 20 tons of water that we've produced, or maybe 20 tons, maybe over 200 cakes that you've produced if you're in baking and catering business. Okay, so that is what we're trying to do. Now, when you determine the cost of raw materials, you also use this. You borrow the same idea of. Here you're speaking now in terms of raw materials, and that is why we now look at opening stock of raw materials. Okay, so we have opening stock of raw materials. Then what we add purchases of raw materials. Now, like I think you remember, like I said, we do for the other normal kind of business, we do opening stock, just full stop, and then we add the purchases. Now here, because we are calculating the cost of raw materials, we are adding the word raw material. So we are saying opening stock of raw material, and then we are adding purchases of raw materials. Okay, basically, you want to determine how much raw materials have you used. Okay, what is the value of them? So you're trying to look at how much did I start with in terms of raw materials, and how much have I bought during the period. Okay, now what you started with is also part of what you're going to use in the production. So it also needs to be valued as well. So that's why we're starting with opening stock of raw materials, and then we go ahead to add the purchases of the raw materials. Okay, now we know that purchases have some adjustments, even when it comes to the normal cost of goods sold, the other side, the cost of sales. Okay, and purchases, because when you buy goods, one of the adjustments you could have on purchases is the carriage inwards. Okay, because you bringing in goods, you could incur logistical expenses around bringing in these goods. Now, these logistical expenses ideally increase the value of your materials that you've bought, okay? They increase the value of your purchases. I'll give you an example. If I go, for example, to Dubai and I'm buying, for example, maybe I'm dealing in suits, okay? So I buy, for example, 50 suits and I'm buying each suit at about 1 million Uganda shillings. And that would mean that I'm going to incur about 50 million Uganda shillings, okay? If I incurred in terms of it an air ticket to Dubai of, let's say, maybe the ticket was about $1,000, and that's about maybe 4 million, okay, average at 4 million. So ideally, that 4 million is in extra to the purchase value, okay? So ideally, the value of the suits that I have is the 50 million plus the 4 million, because the 4 million has been incurred in bringing this goods. So it's not only the 50 million, okay? And that is why we are adding any aspect of course, any aspect of any carriage inwards. Now, we are also saying that in case we have some discounts, okay? And here, since these are purchase of raw materials, we are speaking about the discounts that we have gotten from our suppliers, okay? The people that are selling to us. And that discount that comes from our suppliers is referred to as discount received, because it is us receiving this discount. So discount received definitely reduces the value that we are going to pay in terms of our purchases, okay? So you can bring this discount and adjust it here by doing what? By lessing it. For it, we are lessing it because it reduces the amount of money that we should actually pay for these suits. The same thing comes with returns. Now, returns, here we're speaking about the returns outwards, okay? Now, just like discount, just like carriage inwards, you know, carriage inwards, we have what we call carriage outwards, okay? Carriage outwards are usually logistical expenses that are incurred in delivering the goods to the customers, okay? And that is coming from us. That is why it is called carriage outwards. Now, that cost, when it comes to manufacturing statement, is really recognized in the P&L, okay? In the general P&L, we don't bring it right here, okay? So somebody might ask, why don't we bring in the carriage outwards here as well? The same thing with discounts. Remember discounts, we have discounts received, those discounts that we receive from our suppliers, but we also have discounts allowed. The discounts allowed are discounts that we give to our customers, okay? Now, discounts allowed is an expense to our business because basically, yes, we give out discounts to make our customers happy, but it's an expense to us. So it's recognized as an expense, okay? So we don't bring it right here. Here, we are only speaking about things that increase the cost of our goods that we are manufacturing, okay? We have not even reached, you know, when we're in a manufacturing statement, all that we are considering, we have not reached the point of sale, okay? We are all trying to look at our materials when they are still in raw format, okay? So we are trying to look at our transformation of these raw materials from when we've bought the materials to the point in time when these materials are ready to go to be sold, okay? And that is why you see right here, I'm saying we less discounts, if any, okay? And then we go ahead to less any returns. Of course, if you have any return outwards, then that means that maybe some goods didn't conform to your specifications, and these have to be returned back. Either they are damaged and so on, whatever could be the scenario, okay? So any returns have to be reduced. All these would definitely reduce your purchases at hand, okay? The value of your purchases at hand. So it's the same thing. Now, once you've gotten your opening stock, okay, and added purchases, you've adjusted purchases. Now the adjustment of purchases is giving us this value, okay? Now somebody in normal accounting, we make the value that we get after getting opening stock of raw materials and adding purchases. We might call these raw materials available to be used in production, okay? Raw materials available to be used in production. But right here, we may not speak it about. We go ahead direct to reduce the closing stock, okay? We go ahead to reduce the closing stock of what? Of raw materials. Remember, whatever you're talking about here is relating to raw materials. So we reduce the closing stock of raw materials, okay? Now, after we've reduced the closing stock of raw materials, we get what we call the cost of raw materials. We get what we call the cost of raw materials. Basically, the cost that we have incurred in producing the goods within that financial period, okay? So as you can see, we've looked at what is our opening stock at hand. We've gone ahead to add what our purchases at hand. We've also gone ahead to less closing stock of raw materials, okay, to be able to determine our overall cost of raw materials, okay? Now, one of the comments that we are trying to indicate here is that discount received can as well be added to the gross profit instead of being subtracted from purchases. So we saw here that when it came to add purchases, when we came here, we said less discounts, if any. Now, these discounts are discount received. Like I said, discount received is a case where it is us that are receiving the discount from the suppliers. Discount allowed is when we are giving it to the customers. Now, as discount allowed is an expense, discount received is an income, okay? So the guideline is telling us here that we can either less it here directly, or we can actually less it, add it at the point of gross profit, okay? And when we are adding it right here, still we are adding it as other incomes. You remember when you're drawing up your standard P&L, after gross profit, you add other income. So you can do it. It will give you the same, it will basically give you the same net effect, by the way, okay? So you don't have to so much basically worry about that. So I just felt I should note that. And then we have the, after we've now gotten the cost of the raw materials, okay? Remember we said we have three things. We have the raw materials, we have labor, and then we have direct expenses. We shall see how this plays even when we look at a number, okay? And just for you to, you may ask yourself, so what could be included in the direct expenses? Right here, we give an example of royalties, okay? Royalties on production. And royalties on production could be, I think you've, royalties could either be at something to do with the trademark, okay? For example, I'll give you an example. If it is KFC, if it's a KFC stall, or maybe KFC shop, or sort of, they pay some royalties to the owner of the brand, okay? So that could be the case. Royalties could also be around, maybe somebody also gives you a trademark. For example, if you're producing some goods right here in Uganda, but those goods maybe have an inclination to an international brand. So that could also be a case. You could also have royalties are also very so much common in oil production. People who have worked in the oil sector will agree with me. Royalties, you pay royalties to the owner of the oil fields, okay? The people that own where you actually extracting this oil, because they own the fields, okay? So basically just to give, but direct expenses could cascade to even other things, okay? Like I said, I'll give you an example. If, for example, production of water, the expense of branding that water, okay, is a direct expense in its own. It's one that can be attributable to the product, but basically it's a direct expense. It's not like you cannot include it as a direct raw material, because that paper that is put around the bottle, that kind of branding, okay, either it could be a paper or an engraving that is put on the bottle, is basically a direct expense that you can easily directly attribute to the product, but you may not really regard it as a direct material, okay? Because the direct material, we are trying to look at the core material, okay? Important to understand. So after we've understood the direct labor, the direct materials, it's only the direct materials that had the calculation. When it comes the direct labor, we basically just add it directly. We usually given the value directly. And then we have what we call the factory overheads. Now, these are also our indirect costs. Now, also to note that the direct costs up, the direct material, the direct material, the direct labor and direct expenses can also be called prime costs, okay? They can also be called prime costs, okay? They can also be called prime cost. So when somebody says, asks you for, or you see somewhere where they write the word prime cost, know that they are speaking about direct costs, i.e. the direct material, the direct labor, and then of course the direct expenses. So factory overheads, in addition to the prime cost, factory overheads are usually other costs that we incur in production of given goods or given commodities, but are not directly attributable to the product. So factory overheads are also called indirect costs. Okay, you can note that down. The factory overheads are also your indirect costs, but these are costs that are being incurred within the factory. Okay, we are going to see that when it comes to a manufacturing company, for example, I'll give you an example, like let's say maybe Coca-Cola. Okay, Coca-Cola itself, it has factory overheads. It has the direct cost, and then it also has the factory overheads as well. Now, when it comes to the factory overheads, these are costs that are incurred within the factory. Remember, we've not yet gone to look at other costs, like, for example, costs incurred in selling these goods, costs incurred maybe in the administration office that is not totally in the factory. So we shall see how we bring in all those costs later on. Okay, so for the factory overheads here, what we are trying to look at, the rent and rates for the factory. Everything is factory. Okay, then we have factory power. This is maybe power for running the machines. We have the factory lighting. Okay, of course the factories have to be lit. And then we have the depreciation of plant and machinery for the factory. Okay, I believe that by this time you know that depreciation is an expense that should actually be recognized when you're trying to look at your profit and loss. And then we also have what we are calling the supervisors' wages and salaries. Okay, so as you've seen up in the direct labor here, we're trying to speak about those guys that are directly in the production, okay, of these goods. Right here, we are speaking about now other wages, okay, that are incurred in the factory, but are a bit general in nature. They cannot be easily attributable to a given product. Yeah. So after we've looked at the factory overheads, we also have this component of work in progress. Okay, like I said, because it's a manufacturing company, at the start of the year, you can have some goods that are not yet fully to the finished goods level. And that is what you call your opening work in progress. Okay, and then at the end of the year, because the year just ends in the midnight and maybe production has been going on, so you also have some goods that are not yet at finished level. So when it comes to manufacturing concerns, we've already indicated that we classify these goods in the respective categories: raw materials, and then not only raw materials, but then we also have we do have the work in progress and then the finished goods. Okay, so it's important for you to understand how this plays. So finally, let's look at how this manufacturing statement would look like. So this is how it would look like. This is the format. Okay, so we are saying that we start with our prime costs, which are also called our direct costs. Okay, so we look at the materials. Now, all this information up to here is all trying to calculate the raw materials. Okay, so raw materials have a unique way of being calculated, and that is why we do what? We start with opening stock, we add purchases, and then we less closing stock, okay, of the materials, and then we are able to get what we are regarding to as our cost of raw material consumed. Okay, important for us to take that into place. And then after we've determined our direct material, like you've seen, it is materials that have a calculation on it. And the reason why materials have a calculation on it is because we have under materials, we have different categories. Like we've seen, we have the opening stock, it's also part of raw materials. We have purchases that we are purchasing during that period. And then we also have the closing stock. So all those are basically embedded within the materials. So that's how we basically calculate. I believe right now you know why we less closing stock. The reason why we less closing stock even for other formats of the P&L, is because this closing stock will not be used in this period. This closing stock relates to stock that will be used in the next period, okay, in the next accounting period. And right now, I think you know what we call what we call the matching concept, okay, which says that we should match expenditure and revenue that are related to each other, okay? Like we should match expenditures that are attributable to a given class of revenue. Basically, anything that does not relate to any financial period should be pushed to the next financial period. So not to overstate our cost of raw materials, we go ahead to less this closing stock, okay, to be able to determine our true value of cost of raw material consumed that we shall recognize in this financial period, okay? Important for us to understand. So as you can see, we have the direct labor wages added together, and then we have the direct expenses. Now, also to note, in case you have a question, please, I know sometimes I drive you a little fast. Please use the chat box and be able to ask that question. I'll be able to see it immediately, and then I'll be able to respond to you, okay? But I believe right now you're following, and once we get to an example, you're able to going to understand some of these things even as I've spoken them, okay? So I hope we are moving well. So after you've added your raw material, okay, you've gotten your raw materials, you've gotten the cost of raw material consumed. All this that we are doing right here up is to help us determine this cost of raw material consumed, okay? And then what we are saying, after we've determined our cost of raw material consumed, we now proceed to add what? Our direct labor cost, which is our direct wages. And then after we've added our direct wages, we can also go ahead to add our direct expenses, because all this is actually part of your prime costs, or is part of your direct costs, okay? So overall, what we get here at the bottom is our total prime costs, or our total direct costs, okay? And then we move. Remember, all this that we are doing is we are trying to determine what is the cost of those goods that we have produced, okay? What is the cost of those goods that we have produced? So that is what we are trying to aim at. So we've already taken into consideration the direct materials, the direct labor, the direct expenses. Now we go ahead to add other factory expenses, okay? So we factory expenses or factory overheads, like we've seen, we can have like rent, we can have insurance, we can have depreciation, and so on. Now, everything that we are having here is specifically to the factory. Like you saw, when it comes to depreciation, all that we have here is the depreciation for the plant and machinery, okay? The same thing when it comes to insurance, okay? Insurance should be to insure either the machinery, okay, of the entity, or it could be maybe insurance of, let's say, the factory itself. So quite interesting right there, okay? After we've added our factory overheads, we now proceed to add our work in progress, okay? Now, like I said, you have three classes. You have opening stock, you have finished goods, and then you also have your work in progress. Now, at the start of the financial year, like I indicated, you can have some beginning goods that are now at a stage, like in the middle stage of moving to the finished goods, okay? Now, those goods, once you finish, those goods are also part of your finished goods for that period. And that is why when we are doing our manufacturing account statement here, we should also include such goods. So as you can see, we add our opening work in progress, and then we go ahead to list our closing work in progress, okay? Once we have done that, we now get what we call the cost of goods fully manufactured. We get what we call the cost of goods fully manufactured, okay? So that is what we are getting right there. So I want us now to now go ahead to look at the other component. Now, they are telling us two things. They are saying that the cost of goods completed or fully manufactured is now transferred to the trading account. Okay, the trading account is like the general P&L for the whole manufacturing firm. Like we've seen, maybe just to the reason why we've done all this thing of calculating this cost of goods fully manufactured. Maybe I could just demonstrate something small here. So before we proceed, we know very well that our normal P&L, profit and loss, the profit or loss, the profit or loss account. Remember, we have the format is sales, and your sales could be, for example, like that. Then we have the less cost of sales. And under less cost of sales, remember, we start with our opening stock. Our opening stock, which can be that. Then we add purchases. And then as other people can go on to get maybe goods available for sale, but our less closing stock immediately. Less closing stock. Then you're able to get, okay, this is usually in a bracket. Sorry, this is in bracket. Like that. And then you're able to get your cost of sales, okay? Your cost of sales will basically be the answer to all these. So your cost of sales will be right here to be that. And once you do this cost of sales, remember, the reason why you're subtracting all this is to be able to determine your gross profit, okay? So you're able to get your gross profit. Your gross profit right here, okay? Now, or it can also be a gross loss. Now, like I said at the start, when it comes to this standard format is for this is for a retailing business, okay? This is more applicable to a business that is not producing, but rather is buying and selling, okay? You buy from somewhere and then sell to the other. And that is why when we're calculating the cost of sales, we are only bringing in, okay, so we are starting with opening stock and then adding purchases, but the key component here of our cost of sales is what? Is purchases, okay? And then we are saying that if it comes to a manufacturing concern, okay? If it's a company that is of manufacturing concern, this is what happens. We have the sales, we have list of cost of sales in the same way. We have opening stock, but right here where there's add purchases, we actually add what we call cost of goods fully manufactured. We add what we call cost of goods fully manufactured. And the reason why we do that is because we don't buy finished goods directly, okay, for the normal kind of business. We rather produce these goods, okay? So instead of adding purchases here directly, since we are manufacturing these goods internally, we're not buying them from another external person, we will rather use the cost of goods fully manufactured, okay? Now, when it comes to the general business, now, for example, right here, if I was to proceed, after gross profit, definitely I can add other incomes. I can add other incomes. And like you saw, other incomes could either be commission received. This could be commission received. We could have interest. We could have, this could be interest received. You could look at discount received in case you're classifying them here. discount received, and so on. Okay, you could have several of them, and then from there, after that, you can get, of course, your total incomes. Okay, or total incomes after you've added all those. So your total incomes can be right there. Now, and then of course, less, you go ahead to less operating expenses. Okay, and those you can have also broken down. You can have, of course, you can have administration expenses. You can have selling expenses. Then you can also, you can have some finance costs as well, like for example, interest paid and bad debts and so on. Okay. Now, what I'm trying to mean here is that this is your standard P&L, and we have this also when it comes to manufacturing concern. But the reason why we draw up our manufacturing account or statement is because we are want to basically determine this value of the cost of goods fully manufactured. Okay, and that is why when we get after we've determined this, we can now just bring it and put it right here. Okay, so whatever we've just been doing in determining right here, and we are that we are calling the cost of goods fully manufactured, this has to be transferred into our P&L, or what other people here you could call your trading account. Okay, our trading and profit and loss account. So after we've determined our cost of goods fully manufactured, we are now proceeding to what we are regarding to as our trading profit and loss account part. Okay, now right here, when we are trying to do our P&L, they are saying it includes the cost of fully manufactured cost brought down from manufacturing account, and they are saying this replaces purchases, like what I've just done in the demonstration. Okay, we shall also have opening and closing stock of what? Of only finished goods. So we don't bring in again things to do with opening and closing stock of raw materials in here, because we've already actually determined them. Okay, so we don't bring them right here. The same thing also happens with sales. Definitely, since we are now in the P&L, we have to bring in the sales. As you saw up, we didn't have anything with sales. Basically, what we started with was just the raw materials directly. Just came here, we just started from prime costs. We went to the materials and so on. So when you're doing your P&L, you now bring in your sales, definitely, like we've just seen in what I've just demonstrated. And then they are saying that, in other words, the trading account of a manufacturing firm is similar to that of the retaining firm in many aspects. Okay, the only difference is the cost of goods fully manufactured, which replaces the purchases figure, and that is all. Okay, and then the gross profit is carried forward to the P&L. So we are going to see how this looks like. So they are telling us that elements of a P&L, definitely, in addition to us getting the gross profit, we also have other operating expenses. And these operating expenses are normally classified into three categories. We have the office and administration expenses, then we have the selling and distribution expenses, and then we have the financial charges. Okay, now under office and administration expenses, as you can see, we have office salaries, administrative allowances, office rent, telephone, postage. Now, whatever we bring in the P&L here is not related to the factory. Okay, it's not a factory cost. All the factory costs are included under when we are determining our cost of fully manufactured goods. As you saw, we included those factory overheads right here. Okay, so whatever you included here is not included in the overall P&L for the manufacturing concern. Okay, even when it comes to the selling and distribution, as you can see, selling and distribution, they're telling us we have advertising, we have showroom expenses, we have the delivery van insurance. As you saw up, we had insurance and depreciation. And my comment right here was that the insurance and depreciation that we include here is only that relates to the factory, okay? Anything that happens after goods have left the factory, okay, then that is classified within our selling and the selling and distribution expenses. So that is why the delivery van insurance is placed under our selling and distribution expenses. The same thing also happens with our depreciation of the delivery van. All of it is within right here, okay? And then we have the examples of finance charges. Now, just like any other company, like of a normal nature, even this company also has cases of where we have costs, like, for example, financial charges, like bad debts, bank charges, interest on loans, and etc. Margaret, do you have a question? Okay, Margaret doesn't seem to have a question. Now I'll mute you again. Please only unmute when you have a question to ask, okay? Important to note. So we've understood that this could also proceed to things like, for example, debenture interest, discount allowed, legal fees, accounting and audit and consultancy fees, mortgage interest. All these are within your, all these are within your finance charges, okay? All these are within your finance charges. All right, just a moment, my file is good. So I hope you're following, and I hope this is being helpful to you. I want us to just look at the number, and then that number can give us a highlight on what exactly we should be able to do. Sorry, my file had closed unknowingly. So we're right here, okay? So this is how now the format of your trading and profit account, the one I'll be speaking about and the one I've just demonstrated for you in the Excel there, okay? So I'm saying we start with our sales as normal, as you can see. We start out with our sales. We now go ahead to less our cost of goods sold, just like the way we do it the retailing company. And then we go, we now look at opening stock of finished goods, okay? Like I said, you don't bring in opening stock of raw materials right here, okay? Because you already catered them under your cost of fully manufactured. Now, this is the value that you've gotten from your account statement, as you saw when we did our, this is the manufacturing statement, okay? This is the manufacturing account statement. At the end of it, we had what we called the cost of fully manufactured. Now, this is supposed to be transferred to your trading and profit and account right here, okay? As you can see, we are now adding it on our opening stock of finished goods. And then we go ahead to less the finished goods closing stock right there. And then we are able to get our cost of goods sold, okay? And then we are able to get, lastly, we're able to get our profit, gross profit, okay? Now, after we've done that, we now bring in the other expenses that we've just looked at, the breakdown. We have the office and administration, we come and list them, okay? Then we have our selling and distribution expenses, we also come and list them, okay? As you can see, the carriage outward is now coming right here. Like I told you, the carriage outward basically relates to sales, and that's why we brought it here. We can also have now the finance charges, the other category of other expenses. As you can see, we've brought in the bank charges. We've also brought in the interest on loans and etc. And finally, we have our net profit or income, okay? Now, when we proceed down here, I just want us to look at an example, okay? And this example can give us a good understanding of whatever we've been studying, okay? So we have an example here, and this example is for Roofclad Limited. They're telling us that Roofclad manufactures iron sheets and sells them to the final users. The following balances were extracted from its ledgers on 31st December 2004. So we have sales, okay? Now yours, when you're trying to do any number, yours is to first check out and see what is my required, what do they really want me to do? So the required is prepare the company's manufacturing, trading, profit and loss account for their ended 31st December 2004, okay? So that is what we are basically trying to do. So right here, these are our sales. Now, every time, for example, you see any figure, since you know now you're required, yours is to question yourself, where am I going to use this value, okay? Now, for example, in this case, we have sales. Now, yours is, where would the sales be? You know, now the sales, you know very well that these sales will now be in the second, in the trading account, in the trading and profit account. That is where we shall put the sales. They don't appear in our manufacturing statement, okay? Important to understand. So when I see purchase of raw materials, then I also know where these are going to be. These are going to be in the manufacturing account statement. When I look at wages of crane drivers, the word crane drivers, okay? These ones I could, yeah, I could say, could I call this direct what? The direct expenses or direct wages, we shall see. Then we have what they are giving us, the factory direct wages, okay? So they're already giving us the factory direct wages that we should consider, and this goes in the manufacturing account statement. Then we have the manufacturing expenses, okay? Right there, we have the general expenses, okay? We have the promotion expenses, we have the discount allowed. We proceed. We also have the discount received on raw materials. I think you also remember where this was put. We also have the salesman commission. We have 14 million. We have the head office salaries, 15 million. And then we have carriage outwards. They're giving us electricity. They're giving us for factory and office. They're also giving us ground rent, okay, right there. Then they're also giving us bad debts. Then down as we proceed, we have insurance. We have insurance. They have given us insurance for the office building. You know that the insurance for office building goes in the general P&L, okay? And then this for factory premises goes in the manufacturing account statement because it's part of the cost of the goods fully manufactured. The same thing with depreciation. As you can see, depreciation is 1 million. This is for the office building. This goes in the general one. The one of the factory machine goes in our factory overheads. The legal fees, definitely these ones are what? Are part of our finance costs. As you saw, legal fees are part of the finance cost. Then we move down. We have the stock taking exercise. They're saying the stock taking exercise revealed the following. They have given us our raw materials at the start of the year, 8,000. They're also giving us raw materials at the end of the year, which is 7,000. They have given us the value of work in progress, which is 4,000. And they have also given us at the end of the year, which is 3,000. They have given us the value of finished goods, which is 9,000. They have also given us the other of 8,000, okay? So that is 8 million because of the degree of precision here, just to take note, okay? And so the question is basically asking you, prepare the company's manufacturing, trading, profit and loss account for their ended 31st December 2004, okay? 2. So what we are going to basically do, just going to come here, do it very fast. This is one of the cheapest numbers, by the way, you can ever find in an accounting paper, okay? Because it comes and everything is really clearer, okay? So this business is called Roof Clad, okay? This is Roof Clad. So I'll say Roof Clad is manufacturing statement as at 31st December 2004, sorry. Okay. Like that. So I'll come to my question and start now looking. Remember what we said when it comes to what we said when it comes to our manufacturing account statement. Just to go back here. I just want you to show you the format. So you can see, this is our manufacturing account statement. It should start with the prime costs, okay? And then what the next thing we should add are overheads, okay? And then after overheads, we should go ahead to add our work in progress, opening work in progress, and less the closing stock, and we should be able to get this, which should be simple right now, okay? Based on our question. So I just move right to our question, and we're able to, we shall now start looking for that information as it is, okay? Right here. So since I'm already in my Excel, I'll now start with prime costs, just like the way it is here, okay? Prime costs, okay? And the prime costs, what I'm trying to start with is the direct raw materials, okay? The direct raw materials cost, okay? So I'm first trying to look at the direct raw material cost. Somebody says, how can we get the slides, Mr.? If you're part of this class, this is a if you already subscribed to the class, I already shared these notes with you, okay? So remember, these are free classes. The first classes are free. So when you subscribe, I'll give you the slides. I'll give you all this information that you need just for you to note. So I proceed. So we are starting with our direct material cost right there. And then somebody says, what is the subscription fee? Our classes go for 200,000, okay? Our classes go for 200,000 if you're joining through the normal classes like this one, where we get a topic and start from its inception to a point like this. If you're joining in for the revision class, they only go for 100,000. And for revision classes, we don't go in detail like this. We basically get a past paper question and break it down and answer it together, okay? So that is what we base. So that's the difference. But when you pay for this class, you also have access to, when you pay the 200,000, you also have access to so instead of paying 200 plus 100, 300, you only pay 200 and you're able to access this class and also the revision class, okay? And if you're joining it right now, you'll be able to access all the classes that we've had in the past and or any other classes that will come after this class, okay? So you're able to, these classes are recorded, so you're able to get the recordings, watch through, understand the concepts. We are available on WhatsApp. You can ask your questions and then we shall be able to answer them accordingly. So I hope that is clear. So I beg to proceed. So I'll come here. So when it comes to materials, they have given me purchase of raw materials. But before I look at purchase of raw materials, I need to record opening stock of raw materials, okay? So the opening stock of raw materials, they have given me as 8,000. So what I'll just do, I'll just come here and say opening stock of raw materials is 8,000. I'll try to include here my amounts. My amounts will be here. These amounts will be in 1,000s. I also have amounts right here, okay, in 1,000s. So I'm starting with opening stock of raw materials and I'm going to put 8,000 right there. Okay, 8,000 right there. Then I'm going to add purchases. purchase of raw materials. Purchase of raw materials. I'll go back and look at the value of purchase of raw materials provided to me, which is 50,000. Okay, it is put it right here. That's that purchases can have some discount received. Okay, and then the other adjustment that we can also have would be carriage inwards. Okay, we can have discount. We can have discount received, and then we can have the carriage inwards. Okay, and then we can also have returns. Now yours is to check through and see where the adjustment entries. Okay, I hope you're trying to see the screen very clearly. If you're writing, you can be able to write these things, but I believe you're seeing my screen very well. So do we see any adjustment entry apart from I see discount on raw materials? Do we see any other? Are we seeing any other? Let's say what else do you see?
Discount allowed.
The discount allowed. The discount allowed, like I indicated, is not supposed to be in the manufacturing account statement. Like we went and looked at the format of the month. Now just get right here. This is our what? This is our format for the manufacturing account statement, which we were preparing. When it comes to the discounts, the only discount that we take into consideration is only the discount that is I think we had done another format right here. It's only the discounts that are on the raw materials. Discount allowed is at the selling level. Okay, when we have already started selling, these goods are ready for sale. Okay, and remember what we are preparing here basically only relates to goods before they actually reach the point of sale. So I will not include the discounts allowed. Okay, I hope you understand that. So another person to try. Okay, so I don't see any other person trying, so I'll go and list my discounts received. Okay, I'll go and list my discount received right here. So less discount received. So the discount received is 2,000. Okay, and remember here I'm adjusting now the raw materials. Okay, I'm just adjusting the purchases. Sorry. So you can even adjust and maybe put the 8,000 in the next column here, so you don't confuse yourself. And that means you have like 3 columns. Okay, you have maybe like 3 columns for you to pick. So my purchases are being adjusted by discounts, and this is being list. Mine is to check and confirm that I don't have any returns. Please scroll through. Let me just scroll through and see if I don't have any returns. Even in the additional information, you make sure that you look at it and see, which I don't seem to see anywhere. Okay, I don't seem to see anywhere. So I'll basically proceed. So after I've gotten my opening stock of raw materials, added the purchases of raw materials, then I'm going to list my discount received. In case I had returns, I would also list it, and that would give me my net purchase of raw materials. Okay, just to note it for you here, since we are learning. So the net raw materials is how much? Is 50. less this 2,000, okay, which is it's basically the sum, since I've already indicated the negative on the other, which is 48. So 50 minus 2k gives you 48. Okay, so that is what I basically have when it comes to my that is what I basically have when it comes to my raw materials and the opening and closing. So mine is also to proceed. Okay, somebody says, is it okay for you to put? Yeah, you can put it right there. It's just because I'm using Excel. I'm using only puts a negative, so I've just put a negative on it. You can put it in bracket, that is fine. You can put in bracket, that is very, very fine for you. And then but you shouldn't confuse the examiner, by the way. For example, if you put in a bracket, it will be confusing. So if you put, for example, then sorry, my audio. I'm right here. I'm right here, guys. Don't get worried. Zoom had just given me a commercial break, so I was just trying to reconnect. So thanks. So I was saying that I went. I hope you can hear me now. Can somebody confirm that you can hear me?
No.
Yes, we can hear you.
Do you hear me?
Loud and clear.
Yes, we hear you.
Somebody confirm that you can hear me before I proceed.
We can hear you,
Yes,
sir.
Mr. Ibanda, we can hear you.
Okay, thanks. Okay, thank you. Yeah, so I'll try to begin here. Okay, fine. Thank you so much. So I was saying that after we've gotten our 56, we go ahead to less our closing stock of raw materials. Okay, we go ahead to less our goods have been given, and that is why I came back to this question. As you can see, we recorded 8,000 as our opening stock of raw materials, but then we also have our closing stock of raw materials. Now, just to caution you, especially when it comes to numbers where the examiner puts dates up here, sometimes because they want to make sure that you have attention to detail, they may put 31st first here and then put first here. That can happen, by the way. So whenever you're picking a figure, make sure that you understanding what date you have up. Okay. So right here, our closing stock is worth 7,000. So I'll transfer it right here and come and include our closing stock. So I'm lessing 7,000. Okay. Now that alone, once I've lessed 7,000, this would mean that you can put in bracket. This would mean that I'm going to determine what is regarded to as my cost of. I'm going to get what is regarded to as my cost of the raw materials. Okay. I'm going to get what I'm going to regard as my cost of raw materials. Which is the 49. Okay. Someone says, how do we get the 56? This 56 was the summation of it is basically the opening stock. Remember, we are getting opening stock add purchases, and we got the net purchases to be 48. So when you add 48 plus 8, you come to 56. 7K to determine 49, determine the 49,000. Because I can, even for arrangement purposes, I can put it in that column. Okay. Now, after I've now looked at raw materials, I'll now proceed to look at my direct labor. I look at my direct labor. Okay. I look at my direct labor. Now, the direct labor, we go back and look at it from our question. Now, let's see. We have wages of crane drivers, and then we have what they are calling the factory direct wages. Okay, we have what we are calling the factory direct wages. Now, the other that you're seeing, the wages of the crane drivers, these are other factory wages that we are going to include under our overheads. Okay, but for matters of determining our prime costs, what we are going to use is our factory wages. Okay, so that is what we are going to basically use right here, which is 40,000. So for it, it's a bit direct. They have already given us the answer, so I'll just take it to the last column since I don't have to calculate anything around it. Okay. Now the next that I'll be also looking at, remember, they told us that we should also add other direct expenses. Remember, there are three things. We have direct materials, we have direct labor, and then we have direct expenses. Okay, so we are going to add direct expenses. Or other direct expenses. So when you come here, you should be able to look for other direct expenses. We have what we are calling manufacturing expenses, but yours is to look through and see, do I see any other expense that relates to the factory? Remember, the manufacturing expenses are part of your factory expenses. They are not basically direct expenses, okay? And that's why I'm trying to find and see if they are direct expenses that they have been provided. So we basically don't have any, okay? If they had given us, just like the way they had given us factory direct wages, they would have called them still direct expenses. That is what they would call them, okay? So since we don't have the direct expenses, this is basically like nil. We shall now go ahead to determine our total prime cost, okay? Can call it total prime cost, prime or direct cost. Other people may call it direct cost, okay? So we have a summation of this, the 49 of raw materials, add labor, giving us about 89,000, okay? Giving us about 89,000. And then after that, so we've now gotten the prime costs or the direct cost. Now we should add what we are calling the add factory overheads. And remember, whatever is guiding us is the format of the manufacturing account statement. We should stick to your mind, okay? Let me just again show you how it looks like, the one we looked at. As you can see, after getting your total prime costs, proceed to factory overhead. So this is what I'm now going to basically do, okay? And then I'll close with the one of add opening work in progress, and then let's closing work in progress, which is down here, to determine my cost of goods for the manufacturer. Okay. I hope you don't have any question, Katushabe. So that is what we basically what we basically do have right there. So I'll now move back to our question and look for that information. Now, the factory overheads, the first one I have definitely is the wages of the crane drivers, okay? These are not direct expenses, but it's rather a cost for the factory. So right there. Right there, okay? And then we also have manufacturing expenses. Like I said, this is also part of your factory other overheads. Anything that relates to the factory that you've not included up should be included at this level, okay? So this is 15,000, okay? Like that. And then we have now general expenses. These are not really brought up because they don't relate to the factory, unless they had said general factory expenses, okay? Then discount allowed, this one still does not relate to the factory. Remember, discount allowed is at the point in time when we are selling. Discount received, this one we have already taken into consideration. We have left out manufacturing expenses. I thought they are direct expenses. Manufacturing expenses are factory expenses, okay? They are basically factory expenses. In case they had called them direct, maybe they had called them, let's say, maybe direct expenses or direct manufacturing, then they would have been included, okay? So that is why, that is just for your clarity to understand. So manufacturing expenses would definitely be part of your overheads, okay? Because they are not directly attributable to the product. Then we have sale money commission. This one, no, will go under what selling and distribution expenses. Head office salaries goes under our office and administration expenses. Carriage outwards goes in our selling and distribution. Now, when we come here, we have factory, okay? We have factory and then we have office. So this factory and office, we shall pick only the electricity for the factory. It's what relates as part of our factory overheads. The office will go in the general P&L, which we shall, okay, the office expense, we shall record, okay, the office electricity, we shall record it under office expenses. So we have the 14K there. Now go back and search and see. We have the ground rent of factory, okay? This ground rent of factory is part of our expenses for the factory, it's part of the overheads. So I'll include it there. This is 3,000. Directly right there. I'll move to bad debts. That one is not included here. It's included, the bad debts expense is included under our finance charges under the general P&L. Then I have insurance for office building. This is not relevant at this stage, but office issue, the insurance for factory premise is relevant at this level. Okay, so I'll include it here. I'll just come here and say, this is insurance. Right there. Then depreciation in the same way. The depreciation, I'll not take for the office building right now. I'll take basically the factory machines, okay? Like right there, like that. In case you want to manage time, by the way, you can draw the statements that go together, draw the general manufacturing account statement and draw the other, so you're able to put the information directly, okay? But just for learning purposes, I felt I don't want to confuse you at this time. Legal fees, right there, those ones I'll include them when I get to the other level. So basically, I've basically included all my expenses because I don't, my factory expenses, I don't have anything remaining basically, okay? I don't have anything unless there's anything that you see on your side that we have left out. But I believe that whatever we've included, that is all, okay? That is basically all. So these expenses, just this is about 87, okay? So this is about 87, which we can include here. Summation of these. It's about 87, okay? So that is what we basically do have. Now, remember, after we've added this, we basically have to proceed and now look at the aspect of work in progress, okay? Then we shall add actually we call it changes in work in progress. Add changes in work in progress. And what we do when it comes to work in progress, we say opening work in progress. Opening work in progress. Opening is 4K. All right, welcome back again. So we are trying to speak about work in progress. And I was trying to indicate to you here that after we've gotten our 87, ours is now to add the changes in work in progress. And here we're trying to look at the opening work in progress and then the closing work in progress, okay? So opening work in progress from what we've been given basically, just to go back here, we have 4,000, okay? We have 4,000, so I'll pick my 4,000 and take it and put it right there. And then I'm going now to look for the other closing work in progress, which is 3,000, okay? So I'm basically getting the difference between the two things. So let's start. So I should be able to get my difference, which is basically 1K, 1,000, okay? Okay. So my cost of, after that, basically I'm getting my cost of goods fully manufactured. If there's anything we've left out, please indicate it and we add it. Fully manufactured. So basically in getting that, I'm going to add the different categories. Sorry. So I'm going to add the different categories. I'm going to add this, the total prime cost, and then I'll add the total of here under factory, under the factory overheads, and then I'll add last one, which is my change in working capital, okay? Which is change in working capital. So that's important for you. So we have our cost of fully manufactured standing at 177,000, okay, or 177 million, okay. So I hope we are okay up to this level. In case you have a question, please indicate in the chat box, and then we shall be able to answer it. So we've been able to do part one of the question. Now what we are going to proceed to is to draw up. Now, just for you to know that some questions can ask you to basically separate these two things, okay? Separate the manufacturing account statement from the trading, okay? And that is what we are going to basically do, the separate one. But then you can also combine this. So from here, you just proceed down, okay? But here we are now going to have at least separate ones, okay? So this is going to be manufacturing, trading, and P&L, profit or loss, and profit or loss account. Okay. Of course, this is for the period ending. For the period ending 31st December 2004, like that. Okay. So that is what we have. Now, once you have your heading right there, remember for this, we say that we start with sales because this is like a normal P&L that you and me know, okay? So we shall start with our sales. I'll try to put the amounts up. So just copy a little here. And put the amounts, sorry. I'll just adjust sales and put it below here, okay? So I'll start with my sales and then I'll move to less the cost of sales, okay? Like in the same way. Like you remember they only said it's only the purchases figure that changes, okay? So go back to my question and look for my sales figure. My sales figure is 1.2. So I'll go and record it accordingly. 1.2. I think let me record it right here in the second column. And remember, okay, it's like now 1.2 billion, okay? So after less cost of sales, remember under my cost of sales, what I have opening stock of what? Of finished goods. I'm no longer speaking about raw materials here because I'm already now at advanced stage, okay? So I have my opening stock of finished goods, okay? The opening stock of finished goods, I have also been provided with the same right here is 9,000, okay? Is 9,000. So come right here. So 9,000. So somebody says, how did you come to 177? I said 177 was the summation of the total prime cost, okay? Which we added the raw materials plus direct labor, and we didn't have anything for direct expense to get to 89. Then when we moved down, we got the total factory overheads, which were at 87. And then when we moved down, we were able to get our what? Our respective change in working capital, work in progress, sorry, which was 1,000. So when you add the 1,000 plus 87 plus 89, you're able to get 177, okay? So that is what we have here. And this will be the value of our cost of goods fully manufactured. And ideally, that is the same value. Remember here in the normal P&L, what I was going to be able to add was purchases, okay? But since now this is a manufacturing account, what I'm going to add is, I'm going to add cost of goods fully manufactured, okay? And here is when I come and pick this value that I've gotten, I get from manufacturing statement and come and put it here, okay? So I come and put the 177 right there. And that is the whole reason why I did the whole work up, okay? So I now put my 177. You can see. So after that, I now, of course, I'll go on to less. I'll go on to less my closing stock of finished goods. Less closing stock of finished goods. I don't have any adjustment I'm making on this because already I've gotten the value from up with adjustments made already. So less closing stock of finished goods. I'll go back to my question and I see 8,000 here, and I'll carry it to the other side, okay? So I'll come and place it here like that. So after I've done that, I should be able to get my cost of sales figure, which is, just to calculate. So this plus this minus this gets me to 178,000, okay? Gets me to 178,000. my current students must be wondering what is happening today. Zoom doesn't push me out like this, but why it has started to do like this is I tried to change the internet service provider anyway, thinking that it would all be well because I'm spending a lot of money on data. But I see that the ripple effect on this is that it's on and off. The network is not really good. So I'll be going back to the other previous service provider who I think is cheating me anyway, because I have no problem. I have no solution, sorry, to it, because I have to teach you here and you have to learn. So apologies, and please bear with me every time it gets off. It's basically scenarios like that, but at least it comes back and we're able to follow through, okay? So it went through when I was saying that after we've determined our cost of sales, okay, which cost of sales was 178, which was 9K plus 177, which is our cost of goods fully manufactured, and we less our closing stock of finished goods to come to 178,000. If we want to determine our gross profit will be the 1.2 less the 178. The 1.2 less the 178, which gets us to 1022, okay? And I'd say that we can actually even put this gross profit in the last column just for consistency, okay? And presentation. So that is our gross profit, okay? Now, after we've done that, now we are going to less other expenses, okay? Other operating expenses. Less other operating now these are other expenses that have not been included in the factory, okay? They have not been included in the factory. Now, remember they told us that these should be broken down in 3 categories, just for you to recap a little. Remember what we just looked at right here, they said that after we've gotten our gross profit, this should be broken down in office and administration, selling and distribution, and then we should have the last category, which is finance charges, okay? So I'm going to have all those categories right there, okay? So I'm going to start with my office and administration, okay? I'm going to start with office and administration. Like that. So I'll move to the question down and look for the office and administration expenses. You can include the other categories as well at a go, but yeah, we can just go systematically here, okay? So sales already recorded. Some of these things, when you tick them already, since you've used them, you come and tick them off so they don't disturb you. So I have that 21,000, which I'm already taking under my office and administration expenses. The general expense is the first thing I'll take, okay, with me. Under the other side, otherwise, thank you for keeping here. I see the numbers reduced by 3 people. Some people were not patient and had to run away. Anyway, yeah, things happen like that. Okay. So we have the 21 that I've already put there. I go back and see if there's any other expense that I should include here. Promotion, this one I'm going to include it under my selling and distribution. Discount, this is still under selling and distribution. I'll move to head office salaries. Yes, these are needed for office and administration, so I'll include it there. Okay. Then I'll move to I'll go and electricity factory, electricity office, okay? I'll come and pick the electricity for office as well, because it also relates to Remember, I already picked the 14K and put it up the other side. So here I'm only picking the portion that relates to the factory. So this is electricity, factory office, which is 17,000. Okay. Then I'll move right here. Ground rent factory, I already used this, so I don't need to use it. Bad debt expense, that will go under my finance charges. Insurance has office building, so insurance for office building will be included under my office and administration. Insurance. Insurance is 6,000. Okay. Now come here. Depreciation, I only take the one for office building. Sometimes in some questions they will ask you to calculate some of these things like depreciation. They will not give you handy like that. And depreciation was this is 1,000. Okay, depreciation is 1,000. And I'll move and see if there's any other expense under office. None. Okay. Legal fees, those who follow under finance charges. So you should know how to categorize them accordingly. So I'll just move, and what I'll do, I'll leave some in the total of this. Maybe I'll determine it here. Anything maybe I've left out, so then I'll selling and those ones. Sorry. Expenses first can be, of course, it's a cost that you incur at selling point, but ideally from classification, this is one that we usually record under finance charges, okay? Because basically it's an expense, it's more of a finance charge anyway, okay? But some people may classify it under selling, but take it from me that put it under finance charges, of course. So this one, I'll first leave it. I'll come and first pick this one. This is done bad to be 14K. Okay. And then we have head office salaries. Those ones I already took them. Carriage outwards is also part of selling. Remember, carriage outwards, I said this is the money that you incur in transporting goods to the customer. So that should be there. I now proceed right here. Electricity, these ones I already included them. Depreciation in case I had the depreciation for delivery van, I would include it there, but I don't have it. Okay, so I'll now move quickly to my my last component, which is finance charges. So I'll still leave also some space, maybe one this time. Just in case I get something that I've missed out, I can easily come and include it right there, okay? No, we are humans, we are not machines. So I'll go back and see the finance charges, everything that I've ticked on. In case I was doing a paper, I would have already ticked off this. So I'll start with my discount allowed. So some people say they cannot attend online classes, and they keep telling me, when are you opening physical classes? That is when we want to go back. But me, I want to tell you that as a tutor, I've actually found the online classes to be much easier for me than physical classes, because physical classes, I would now be in a class rushing to end to get on either border or to drive home, okay? Which would really not be something really good for me. But right here, at least I am teaching. My bed is near me. My supper is right near me. I just move from the teaching room to another room, and everything is able to. So I think we just need to change our minds and move on with what is current, okay? So the next one that I'm going to consider under finance charges is bad debts expense. Bad debts expense, okay? Right there. And then I'm going to consider is legal fees, okay? I'm going to consider legal fees. Okay, if you're ticking off now, after writing legal fees, yours is to go back and see, is there anything I've not captured, okay? It's both in the additional information, but also in the trial balance that is provided, okay? To confirm. So I'm going to make an assumption that we've covered everything. Everything that is right there has been written somewhere at least, okay? So that would mean I'll get now my total finance charges. So I'll just use the last line there. Just right there. You can even call it total finance charges, okay? So these are my expenses. I can get the total expenses, total other operating expenses. I'm going to add the 8K plus 60K plus, okay, that is all. That is, okay, these are
total data plus selling and distribution expenses.
Okay, thank you. So this is added up also 847. Okay. Okay, so total of this would be sum of that plus that plus that. Okay, which gets me to about 115,000. Okay, so if I want to determine my net profit, remember this is a P&L, so our intention is to get the net profit. It will be basically this minus this to get us to 907. That one like that, 907,000. Okay, so that is what we have gotten. So I hope you've appreciated what we've done. Okay, is everything clear?
It's clear.
Okay, okay, very good, very good, very good.
Excuse
so
me, sir.
Yes, please. You excuse me.
Thank you so much for your time and for everything.
You're
Just that I saw something in the notes. I don't know. I was waiting for you to finish up, and then maybe it's not that something that's going to take us back, but just for you to say something about it. the transfer of fully finished goods at either cost or markup price.
Okay.
Yes,
Okay,
please.
thank
Thank
you.
you.
You're welcome. Okay, so as we saw, now that we've said that this is okay. So this cost of fully manufactured goods, this is basically the cost that we've incurred in manufacturing this good. Now, different organization may choose. We have two options, okay? So this option that we've just worked with is where these goods are transferred at this exactly 177 to our P&L, okay, directly, okay, where we've not added any value. Now, some companies, okay, some companies, they want to determine what we call the factory profit. And basically what factory profit would mean is they're trying to find out, the difference. Okay, they're trying to find out if at all these goods had been bought from another person, like we didn't manufacture them, okay, how much would we have incurred? You get it? Now, for example, these are goods, and for example, if, for example, like I've said, maybe this is this could be, let's say, water, okay, maybe we are water, like we are like Renzori bottling company. Now, instead of manufacturing the water ourselves, in case we are buying this water from another entity, and for us, our role is just to sell, how much would we have incurred, okay? Because one of the things that we understand is that when we produce this water internally, we produce it at a lower cost, okay? Compared to how much we would have gotten it from another person. Because getting it from another person, we have other costs that we shall definitely incur, okay? Now, some companies transfer these goods at what? At a markup. They transfer these goods at a markup to the P&L. So instead of, for example, transferring, let's say 177, they transfer plus a markup, and maybe this could, let's say, maybe 190, maybe 194, okay? And that markup that has been transferred is like, it's like, we call it the factory profit. It's basically the profit we have made by manufacturing by ourselves, okay? The profit we've made by manufacturing by ourselves. And actually, when we proceed right down here, it's actually, that's just a part of solution I included earlier on. It's actually what we are talking about here, okay? Manufactured goods transferred to the current account, to the trading account at their current market value, and the treatment of arising unrealized profit. So when we transfer at 177, like we've seen, we are transferring it at cost price, okay? When we transferring it at cost price. These finished goods can sometimes be, trade price is a representation of how much would So sorry. So I was saying that, however, these goods can be transferred at an inflated price, which inflated price is usually the price that would have incurred in case we are getting these goods from a third party, not manufacturing ourselves, okay? And that's why they are calling it the market value, okay? Now, and here they explain, saying the current market value is what competitors would charge for the same goods, okay? For example, leaf-clad illustrations illustration, if the
So maybe if you
competitor
could
would charge us 194,700 for
so maybe
similar
if you
goods,
could
then of transferring at 177. Okay. So I was saying that in this case, where, for example, we have transfer really friends, I think network is really not really good to me. So I would want to say that we'll continue this class next time. I'll actually, I think what I'll do is in the next revision class, I'll get an example that has this scenario so that we can look at that example to help you best understand. But I hope that the class has been beneficial despite the up and down. Like I told you, it is only coming in because I tried to change the network provider. I was actually using Airtel for all the times that I've been doing the classes, but I now moved to MTN thinking it would be much better or much cheaper, but it seems to be a similar scenario. So I'll be moving back to Airtel. I'm also trying to look into another service provider like Smile or Rock Telecom. I don't know what you guys use, but I hope that when I use that, maybe it will be much better, okay? So I'll start from here next time, but like I said, when you join in through the revision class, I may try to do a number on manufacturing that includes these elements for you to be able to grasp that much better, okay? Because of the time that we have, I usually want to get a topic, run through it, and that's why I did this very fast. And then once we are done, then we can utilize the revision class to try out more numbers. And once we try out more numbers, we're able to understand more concepts. I actually realized I've ever done a session on manufacturing accounts. So I'll share that recording along the way. So you can also go through that other example that I did on manufacturing accounts, okay? To give you a grasp. Once you've done that, you should be in position to try out there are some other examples here. There's another illustration here. And the good news also is that these illustrations have solutions to them, okay? So once you get this question, just first close your eyes on the solution and try out this question as if it's an examination question that is in front of you, okay? And then with that, you're able to master. And at the end of the day, you can now cross-check yourself and see how you've maybe you've been able to do the question based on what is in the solution, okay? So that is one illustration. I think there's also a third illustration, just to confirm. Yes, there's this other third illustration as well. It also has it actually, for it doesn't have a solution, okay? But at least you can be able to, and we also, like I said, I've tried, we will do another revision class that has an examination question for you to basically understand, okay? So thank you so much for your patience and thank you for joining through. Those that joined us for the very first time, I think Dagaras has not been part of us. There's somebody who is using HP. There's Sarah. I think Sarah, this could be your first time. So I don't know how you found the class, but for me, I believe that you've gotten value. Okay. Do we have any question?
The answer on the last question in the chat box.
I think maybe I missed it because I went off. Who is this? Is this Rita? Who is asking?
Margaret.
Margaret, I didn't get your question. I think you put it when Zoom had.
Designer device. Would wish to do this paper, is the content enough? Like, can we rely on it in order to pass it?
Okay. Thank you so much. Now, Margaret, you part. Okay, sorry, I went off. I was trying to guide you on something small. I said for those that joined this class from July, okay, and we've studied July, we've studied August, and now we're in September. If any person is serious during this time, I know you guys are very busy, you have responsibilities, and even when times I come and say, guys, let's try out this number, I get a really few responses, okay? We even have the revision. Some of you don't even attend the revision classes as well. If I'm a student, if I was in your shoes and I'm preparing for a paper in October, okay? If I've studied accounting before, maybe I'm now studying accounting at degree level. I studied accounting at degree level and now I'm joining in through at CPA level. I already have some ground in my accounting, okay? I already have some knowledge on account, so I'm building on. Now, right now, what I would encourage you is make sure you master whatever we've studied, okay? Because whatever we've studied is examined. And then we have what we've done also during the revision classes. Some other revision classes, I think some of them maybe you were not part of them, but I continuously share these recordings with you. So you can basically be able to go through some of these recordings. Now, in addition to that, you have past paper questions, okay, that you can go through and relate whatever you've studied and see how our exam said, okay, and how can I be able to answer some of these things. And the other thing is you have a tutor, okay, a tutor right with you to be able to guide you. So for the remaining period of time, especially for, okay, on assumption that the October exam is actually held, because still we don't have a confirmation on this, given the situation in the country. Actually, if schools had opened, as maybe it was indicated in one of the publications that schools were going to open, then would have some level of confidence that actually the exam is going to happen in October, okay? But right now we are still in a little in question. So as you as a student, yours is to see and say, am I preparing for, if I'm preparing for the October exam, just in case it is there, what exactly am I doing during this time, okay? Am I increasing more time on my study? You know, one of the things that you should know, and me, since I've taught this paper for several years, I know some of these things. What matters is what you've studied. Can you be able to present? In case for whatever you've studied, it comes, can you be able to present? But also as a tutor, during this time, for the next classes we have towards the exam, which exams I think are starting around the 10th of October. So for the rest of these months, like I've said, we are going to be looking at a topic per topic. Now, I'm picking the topics we're trying to look at here. We're also trying to think of doing catch-up classes, by the way, along the way. And that's why I'm saying we are going to be utilizing Tuesdays to be able to elevate on what we've studied, okay, from the class. And then we can also see along the way, I'm trying to draw up a plan, our study plan, that will build into our journey in this remaining 1 month, okay, to be able. So my call on to you, if you're planning for this paper for October exams, go back in the notes I've given you, okay? Go back in the recordings for revision classes. Read them, go look at the past paper questions. This can be found on the iSPA website. In case you don't have access, please let me know, okay? I can find ways of sharing with you some of these papers so you can start practicing, preparing. I actually have only one student who is usually in my inbox. I think she's called either Maya or something, who keeps on asking me about, please tutor, guide me in this now. There are other students that have challenges that don't even post on the WhatsApp group. Let's utilize on the WhatsApp group. In case I post a question and say, guys, let's try out this question. I want you to like push yourself out of the comfort zone and try out these questions. You know, accounting is about practice. I can come and sing here, and we see things going smoothly over and over. But if you don't sit down and practice, like for example, the number we've done right now by ourselves, yours is to go back and say, now we've done this with the tutor Samuel. If I'm to do this number by myself, how will it come around? How will it come out? I know you're very busy, okay? And I'll tell you that myself, I'm also very busy. And that's why you see even on sometimes when I'm sharing with some of the WhatsApps, I'm responding to them at around 1, okay? Or even 2, because I have to put in an extra effort in the work that I'm doing. So it's the same way as well you is preparing. Some of you are doing CPA for the very first time, and you've heard about what CPA is. CPA is not like your degree level. And the reason why it's not like your degree level is because you don't have any coursework mark. Here you have to go and look for the 50 mark in its own, okay? And that is why I call to you to make sure that you're going through all these things, okay? You're going through all these things on your own, master them, practice. That is what will help you pass the paper, okay? So right now, from my side, I'll tell you that you actually have what it takes to actually pass the CPA paper, okay? If in addition to whatever we shall be covering in the remaining period, okay? Because you're studying with somebody who has trained this paper for a very long period of time. So I understand, and I understand how we are moving. I understand the whole progress. What I totally don't have confidence in are my students, because I don't know what exactly is happening. Some of you attend this class and you only come back the next time to attend this class, okay? And that means that for all the week, you've not done anything, any personal reading around there. I'll tell you that every day for the next over 30 days, okay? Do at least one number every day. At least get a topic and say, I'm now going to look at preparation of financial statements. Let me do a number. Let me do a number on suspense. Let me do a number on bank reconciliation. Let me do a number on manufacturing. Let me do a number on nanny for profit. Let me do a number on, let's say, on objectives and so on. And what else would really stop you from passing, okay? So you can really pass this paper in case you're very serious. Some of you are coming in with knowledge from different other levels. Okay, apart from people who are joining in from A level, because you know CP also gives you a leverage to join in from A level. You don't have any financial accounting background. For you, might be struggle, but somebody who has come from another level with some level of accounting knowledge, you should really not have any worries of passing this paper. It's possible. Some of us actually didn't even go to class to study this paper. We just built onto the knowledge we had from the degree level, did reading, extensive reading, putting in additional hours to be able to read. After this class, like some of you, yes, you're going to rest, but put in that extra, either whatever works for you. It could be morning hours. You could wake up in the morning and do the reading. You could do it maybe after work, but find a study plan for you to be able to prepare yourselves and see if you can do the October exam. If all conditions are not fine for you, okay, and I really understand if conditions are not really fine for you, you can postpone this exam to December, which December is also not very far, but that should not make you again relax, because remember, we are continuing with the classes, okay? And you should attend the classes. So you, when we get to, again, preparation of December exams, we may not have these classes like the way we have them. So it means that if you're studying, for example, for the December exam, you'll be with us up to the end of, let's say, September, maybe partly in October. Now you can use the October and November to do your revision, your personal revision. You can also attend, you can join in for our revision classes later on, to be able to prepare along there. So that is what I can comment, basically. As I was talking, there was a hand by Issa. I don't know what Issa has to ask. Thanks.
Thank you, Mr. Samuel. I think I'm among the few guys who have joined you for the first time. I joined you from Somalia. Maybe some of the colleagues are not aware. And my question was, in regard to the revision classes, if, for example, I'm to join you maybe from today, these classes will continue up to when? And on paper-wise, how many papers are we going to revise? Is it only for financial accounting, or we do have other papers? That is all. Thank you.
Okay, thank you, Issa. Issa, we of course, based on the CPA program, we have different other papers, okay? But for myself, I do teach this paper. I do teach financial accounting, and I do teach the level 2 paper of MDC, which is management decision and control, okay? But we are a team, and my colleagues teach the rest of the papers. For example, my colleague Julius teaches quantitative techniques. We also have taxation. We have the different papers that you can be able to be part of, okay? So that is what I can basically comment. Now, this revision, in case you join the revision classes, the revision classes will run now. The revision classes that I'm starting, that I'm running right now, definitely will run up to October, okay? For the students that are preparing for October exams. But for the students that are signing up to prepare for the December exam, these revision classes will continue to run, okay? So for you who is joining in right now and your focus may be for an exam in December, know that you're joining in for revisions that will run up to December. Okay, up to November, basically, okay, because the exam will be in December. So they will run for the next September, October, November, okay, for the next 3 months. And we meet every week, we meet once, okay? But when you pay for the revision class, you only access the other class. So thanks so much. Any other question, especially from Margaret? Have I answered your question?
Yeah, you've answered. Thank you so much.
You're welcome, but I've not gotten your comment. Have you, what, so are you preparing for October? You're preparing for December?
Anyway, I would wish to do it in October, but I a bit get scared. I'm like, is the content enough? I try my level best for preparations.
Okay. Any other comment? Shira Mbaba Zize. Any comments?
Hello, Sam.
Yes, Rita.
Thank you for the class. But me personally, I'm now preparing for December. So I'm concentrating on some other 2 papers that I'll do in October.
Okay, fine. Yeah. So she for that is her plan. Okay. Somebody comments here. Class was beneficial and very glad to be part of this. Hopefully we'll meet next time, God willing. Okay, thanks Isa for joining us from far as Somalia. I think that is what online classes help us. We're able to connect with students that are away. We even have students from South Sudan, some from Kenya. Sometimes we get students joining from Nigeria. So that is what has really brought that's what come with online classes. So friends, I would love to really let you go. In case you have any more other questions, you can basically send those personally to me and I'll be able to answer them. Otherwise, it's been a pleasure to have you part of this class. And I wish you all the best. Yours, Samuel Ibanda, as always, your financial accounting tutor. Bye-bye.